Check, check. 1, 2, 3. Check, check. 1, 2, 3. All right, looking like butter. Let's roll. All right, all right, all right. Good evening, everybody. I hope everyone is having a great day. And I think what we're gonna do is we're gonna take a look at the markets today. I unfortunately was not here physically today, so I missed you all. Hope everyone's having a good evening and is ready for the trading day. Today was a interesting day, it looks like, and we're gonna take a look at what tomorrow might occur. So we already did the market review. One audio works. Awesome. Phoenix, good to see you. Good to have you as always. Excellent to have you here. Video's working. Fantastic. All right, let's head over to the charts then and take a look at this so that we can get you to bed, and we'll go from there. So what do we have for tomorrow? Well, we've got ready, set, go. Absolutely. So tomorrow we have 8:30 a.m. preliminary GDP. And then throughout the day, there is some, this is very bland. You're not going to see very much movement on the indices on crude oil inventories. Beige book, very seldom as well. Will you see major movement on the beige book? You'll see a little bit of movement, but not much. The real big one is on Thursday at 8:30 a.m. because that's the one we want to watch out for, and that is partially the reason why we have been stuck in this consolidation area this whole time. So we definitely see that markets have opened up and continued upwards. So today we'll take a look into that, what that looks like, what that means. Insert name here, recap, let's go. Oh, you want the recap? Yeah, I mean, I recapped at the end of the trading day on the live stream today, but maybe just for you, insert name here, I'll do that just for you. So we're gonna watch out for 8:30 a.m. tomorrow morning, and we're gonna try to be online before then. I will be trading with you tomorrow and Thursday. I have taken those days off, but I might need to hop away for a meeting here and there, depending on what I can handle. So let's take a look at the charts. I'm going to bring a daily chart up here first. So let's take a look at the most recent run up, right? This is what the price looks like if you look at it from the past few days. We see that the market opened here. We came down. We started to go back up, and we've closed above here, and now we are at a point where we're actually aiming for excuse me. We're actually aiming for, and I'll put that over here, but you can see we haven't hit this relative equal high. What do we think that we might be aiming for? Well, we again did not create a lower low. We did not create a lower low. We actually created a higher low here. And so I believe our expansion is going to be to the upside at this point in time, especially if we close above this rejection block. There are lower time frame areas of liquidity that we can take a look at and seek out, and then higher time frame areas of liquidity that we could aim for and potentially move towards. So we'll take a closer look at that. One thing to note, there are no imbalances around here, but you kind of see how we had an inside candle, meaning the top and the bottom had not been handled whatsoever. So whatever move occurs next, I think it's coiling up to make a big move. So we'll see what happens. Until that happens, we are going to consider trading. We are trading in a consolidation, right? So let's take a look at today's price action. We've been trading within this range. That's to nobody. That shouldn't be a surprise to anyone, right? We've been trading within this consolidation range. So when we're trading in consolidation, we look for turtle soup type entries, and we have gotten that all week. All week we've seen that. So that is no different today. Today was a little bit tougher, I'll admit, but still you do see that we had a London low. We see we traded up to it at the beginning of the day. We traded back down turtle soup, took out those sell side, and then continued at open to move upwards and onwards. Now, we did not end up taking out a key area of liquidity yet. We took that out in the Asia timeframe, but we haven't taken that out all throughout the day. We instead made sure that we stayed below this 3-month and 1-month rejection block that we had marked out from earlier, right? And notice how price is always at that 3-month level. We've seen us pass through it, come back down, pass through it, come back down, pass through it, come back down, and now we have failed to make lower lows. That tells me something, right? So I think that we're going to be still heading higher. We do definitely have this higher high. This kind of like this was a really quick run up in the 1-minute time frame. So I don't know if we're going to head that high yet, but nevertheless, we are going to make sure these short-term highs on the hourly are marked and that they are expanded until today, right? The day that we're trading. I like to put them out until 5 o'clock p.m. because then that makes it so that I know they'll continue into the next day, right? I should have put these at Wednesday, my bad. So now you see these are all a part of the upcoming area of liquidity. And what do we also have? Well, we have that daily volume imbalance. So let me go back to the daily so you can see that. That gray box up there, up here, right? Now, note that, I want you to note this keep this in your notes rather. Note that this volume imbalance, we've only traded up through it with a wick. We haven't closed above it or back down through it. So I like to keep this as a reference point until we do that. So I treat this as a gap, and we want to see this turn into a balanced price range, and then we want to see whether or not it treats it as a inversion fair value gap when we bounce higher, or we treat it as a inversion fair value gap in the terms of like we've traded through it, take out stops, come back down, come down below it, and then treat it as a way to go lower. I haven't decided what that will be yet. We need a little bit more price action to tell, but from a daily standpoint, currently my bias is to the upside based on price action today. That could change, of course, if we see a really massive spike down, but for the time being, I do see the liquidity above us. I do think that we'll head back down into this fair value gap, what remains here, rather, on the hourly. Whether it's in London or whatnot, I think we will head back down, pick up some orders in this fair value gap. So note this on your charts as well, on the hourly time frame, right? C-Easy, what's up? Good to have you here, brother. How you doing? Let me know. How was your Thanksgiving, man? Hope it was really delicious and well. Hope you got to spend it around friends and family. And if not, solo time is great too. Oh yeah, one thing that I did not move all the way out, this daily wick. I want to move this all the way out here because that can also serve as a draw on liquidity. So this is a hourly upwick consequent encroachment. We haven't come up to here just yet, but we certainly could, right? So we will keep those in mind for price to potentially run up to. So now you see that we have these draws on liquidity. If we cannot make it above the consequent encroachment for very long, meaning we come up here, we reject, there's a good chance that we will end up heading downwards from there. So, or at least retracing a bit from there. So I'm going to watch this really closely because it's so close to the daily volume imbalance over here. Okay. CEZ, I'm good, man. Thanks. Good. I'm in the Gulf. Oh, okay, gotcha. In the Gulf, we don't have Thanksgiving. Well, appreciate you being here, and I'm sure there'll be other holidays that you celebrate where you can tell me all about those. So, Kirk, how you doing, brother? Good to see you. Good to see you. Good to see you. And yeah, so let's continue onwards. So we have, let's take a look at some of these. We have on the hourly, I'm trying to see if there's anything else. We still haven't broken up this buy side, but if this fails here and heads lower, we can either see this as a bunch of relative equal highs waiting to get smashed through by unemployment claims, or we can treat this as a failure, depending on how low we go. I don't think we're going to go all the way down to attack these lows, but hey, it is possible, right? So we're going to keep track of this short-term high, these relative equal highs here, this short-term high here, this upwick here, this daily volume imbalance here, and ultimately 16173 on the upside. Those are our targets, right? On the downside, or rather on the sell side, we understand that we traded through sell side liquidity here. So we want to make sure we update this over here now, right? So this is, we want to make sure this is at 5 o'clock p.m. on the 29th. We want to run this out to the 29th. And we want to make sure that this low, 15,945, that we mark this. That's a key low. Can it get all the way down there? Absolutely. Will it? I don't think so. I would be hard-pressed to see it come all the way down here as well. Now, what I can do is I can treat these as relative equal lows. They are pretty close to each other, so I can treat all of these actually as relative equal lows. And that lends itself to the consideration to the downside. If it does end up completely giving up the ghost and trading to the downside, this would be an area that I would look for. Reason being is that we also have this fair value gap as well. We've only traded it through it briefly, so breaking through all of these would be something that I could definitely see happen. And now we, of course, we have this relative equal low down here. So we want to make sure we have all those out. Not saying that I'm two-sided. I know that my bias is to the upside, but that's what I'm seeing. CEZ, the hourly just displaced bullish, 4,600 draw on liquidity. Oh yeah, you're talking about the S&P, right? Yeah, it looks like you're talking about S&P 500, maybe SPX, CEZ. Anatoly Fedorov, when are you sleeping? I am I'm jacked up on markets. I sleep during Asia and London like true United States people do. But yeah, I try to stay up and do some work. This is exciting to me, so I love doing this stuff, So we have our good to see you, Anatoly. Glad to have you here, brother. And yeah, so on the downside, if we were to see something crazy, that's what I would be looking for first, with a return eventually down through this new week opening gap. Treat this like, an inversion fair value gap, bounce down and head to the weekly area here. I don't think we're going to get all the way down there. Okay. Where you live at, bro? Yeah. I live in America on the eastern, no, not East Coast, but in the middle. It's in a state called Ohio. Okay, so right now we don't have enough data. Asia did start upwards, moving upwards. And we are on a Wednesday. So what I want to look for, I want to look for whatever price is at come midnight. I want to draw that out over time. And then I want to find areas that are in discount to be able to buy. So we see that this bullish order block respected. This fair value gap respected. And I think we can definitely treat this short-term low as an area to come back down, take out sell stops, come back down into this fair value gap, and then come back up. Now, I definitely do see this wick down here. We could see that midpoint being the new week opening gap, but I don't know. I don't think we're gonna head down there, but it could. This bullish order block is technically there as well, so I'm keeping that in mind on the hourly. Okay, that's really it. Insert name here. I think that during the day earlier today, I think I showed this earlier. Where is it? Okay, so the play that I made earlier today was over on this move down to this area of liquidity down here. So 15949.75. If I can go down to the minute, I might be able to show you. Let's see if this will show. I might need to show executions. Okay, cool. So on the minute time frame, oh, there we go. So in the morning, right when I got online, I could see that this area of liquidity down here, this was a draw on liquidity right down here at the time, right? And we were talking in the morning about how I actually had entered right here and I had to exit because I had to do something. I re-entered on the way down because I saw it was heading down towards this area of liquidity first. So I took that all the way down and exited, around 9:55. I only needed about 15 points of movement to pass today. And today, oh, let me see what Mo's saying. Johnny, what's up, Johnny? Passed one of my evals on Apex today. Just got to get 8 more trading days in. Awesome, brother. Wait, why do you need 8 more trading days? Because you need 7, right? I too, Mo TV, I passed 2 of mine as well. But it's kind of like, if you haven't seen this before, this is what it looks like. And I'll show you a screen cap of what new accounts kind of look like. And I guess what I can do is I can bar this off so that you don't need to see what accounts they are. That doesn't matter, but these accounts, that's where I traded very high. It's a strategy that you should not trade if you do not have the excess capital to do so. But I decided for shits and giggles to buy a new accounts today. So I also was able to pass. Because isn't it a total of 10 days? No, not for evaluation. So you can kind of see here, Mo TV. So here are 2 evaluation accounts that I had passed a long time, or I had passed on the first one day, and I kind of was trading micros on the next 6 days or so. So on the 7th day, you'll get this passed account status. So you only need 7 full trading days to pass your evaluation, right? So you won't have to wait all 10 days. That's for when you get to the performance account. 10 days is required to do a withdrawal. Okay? So hope that helps. But this was the trade today, seeing that we dropped below. And this is one of my favorite models. If you're paying attention to models, I'm going to do a video on this. But if you're paying attention, this is one of my absolute favorite models to trade. So we have an original consolidation range here. Okay. We can consider this even. And actually, I kind of like to make it a little bit smaller here, because then I can create one more. So right now we have this consolidation range. We have this consolidation range. We've got this consolidation range. This is on the way to being a market maker buy model, right? So there's a whole bunch of lessons on this. This is one of the easiest setups to see. So on a lower time frame like this, we can kind of see that we've started to consolidate a bit, right? Consolidate a bit, return to consolidation, then consolidate. But what we see here is first distribution, second distribution, and then we see a short. We see this displacement down below, a short-term low here. Now, you could have treated this one as well, would have equally been just as good because of the time of day in which this is occurring. This here counts as a displacement below previous short-term low, right? Even this one here counts. You would have had to take a little bit of a drawdown if you were to enter too early, but this would have helped you right at 7 o'clock in the morning. This was a perfectly good model. Even right before it, right there, was so many entries on the 1 minute, so many incredible entries here that you could have entered on. I happen to enter on this larger displacement to the downside. Where is it aiming for? None other than the previous short-term low. And this is what's called a market maker sell model, where you have first distribution, second distribution, third distribution, and then just straight up drop down to our previous short-term low. Market maker sell model is one of my absolute favorites. You need to study that. If you're going to use it as a model, you need to back test it, make sure that you have what you need. And then you can combine this market maker sell model with some of the things that you learned throughout ICT's training. As you go through and learn ICT, you can treat that and combine things. Like, for example, 2022 model, right? We see price head to a key level, which is a new week opening gap. We see price displace downwards. So you can enter right here on this sell side imbalance. Oops, that's not what I want to do. Sell side imbalance here. So you kind of see this sell side imbalance right there. We see a short-term low being violated, displaced. We come back up to it. You can enter short here. Now that's about 16,003. You're gonna have to eat about 5 handles worth of you know, drawdown, but your stop should be above here, 1610. And once you enter here, a few minutes later, drop further displacement, yet another entry, because we've broken through another low right there, right? So low risk entries right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 entries down there. Let me see. If it's 7, MoTV is in a total 10 days. If it's 7, that means I just need 5 days. I currently have 2. Yes. Yes. So Mo, I would recommend that you, assuming that you have enough buffer above those accounts, I would recommend you trade micros until you get to that 7-day mark, and then that will transition to a performance account for sure. Phoenix AVS, trade ES so you stay on the green side. Yeah, ES can move though. I mean, ES can move really quickly. So if you're gonna trade something, just trade micros for the time being. And yeah, MES would work just as well, right? So market maker sell model is gold, absolutely. So this is I mean, you can see so many models on the 1 minute time frame here within this context. Very, very important that it has to be within this context, right? So within this context that we've taken a low out, we've seen a mini market structure shift, we see displacement to the upside, buys come down here, continue, buys continue, key level, drop, return, retracement, drop down, fair value gap, short-term high, lower high, continue down, no real displacement down here, but then we have some here, take out buy stops, further displacement below a key intermediate term low, and then we enter right on the fair value gap here. So another SIBI down here, right? So there's so many entries, so many entries. And then of course, on the second stage of distribution, rather third stage of distribution, we see it just plummet straight down to this level here. So that is definitely one of my favorite models, and I traded that in the morning before I went into work. And you saw that happen. Whoever was here saw that happen very easily. So let's go back to remove. I'm going to remove some of this so we can see the charts a little bit easier. And we're going to remove charts, trader, and we're going to go back to a 15-minute run. So for insert name here, I mean, today's price action was kind of icky because what did I say in the morning? Once we got this through, we were probably likely to aim for these short-term relative equal highs up here, right? We took out sell side. Now it's time for us to head to buy side. And so what did we do? We instantly manufactured some buy side over here on the way up. We spiked up, took out longs, weak longs, spiked up again, and we do see that there is a fair value gap down here that we could have waited to trade to. And what it does do, it trades straight to that, heads up, treats it as an inversion fair value gap, if you kind of see it there. Let's see if I can map it out for you. So this gap there. So we trade up, down, we trade back up above it, come back to it, immediate rebalance, and we head up to take out none other than relative equal highs up here. So that's where price action occurred today. We did end up taking out this short-term high. We ended up trading all the way to this. What is this? Bearish order block, right? So we traded into that bearish order block range, and this line isn't the bearish order block. The actual bearish order block segment that we want to pay attention to is this candle low to candle open, and it trades right to that and starts to reject. From that point onwards, we go back down, take out some liquidity here on a lower time frame, I believe. I believe that fair value gap is on the 5-minute chart. So we'll go back down a little bit and look at this whole section right here and study that a little bit more, because there's a lot of good stuff here that told us we were going higher. So once we hit that buy side imbalance once more, we head up, we create a higher low, higher low, and we continue and finish off the rest of the day. So let's go down to a 5-minute, review the market once more, and we're going to review that little 9 o'clock to 11 o'clock time frame. So as you can see down here, remember, this is the move down that I took in the morning, right? We took out this sell stop, and then we started to gap up and create none other than fair value gaps. Do we create a higher high than any of our short-term highs here? No, we don't. But what we do is we create a short-term high here, and then right when open occurs, we see it imbalance, take that out. We want to see price head back down into a discount now that we know market structure has shifted to the upside. We take out sell stops here, and we go down to a 5-minute fair value gap, just briefly, just barely. What's the low on this candle? 15958.50. What's the low on this candle? 15958.25. Right? So you're starting to see what's going on here. So being on our bias is bullish on the overall trend. We're not trying to pick tops, right? Even though we were thinking that that weekly draw to the downside is a huge draw, it still is. It still is, but we are trading with the current movement of the trend, and we don't want to be trying to pick a top when we don't see it yet, when we don't see evidence of it yet. So we are still bullish on this run up, and we see that run up runs straight up to this 3-month rejection block, rejects here, and then continues back downwards for the afternoon, comes back down to pick up a few more orders around this area, and then displaces back upwards, and we see a little bit of movement towards the end of the day. So, and we see a nice movement in that end of day macro, the last half hour of the day. This was a fantastic movement. It was in a hurry to get to a certain spot, and it has gotten there and then some now. So what do we see for the coming day? So as you know, we have 8:30 a.m. We've got preliminary GDP, and then it's a pretty lackadaisical day in terms of economic events. The real big event is going to be the OPEC JMMC meetings all day, as well as the core PCE price index and unemployment claims Thursday morning at 8:30 a.m. Not tomorrow morning. Tomorrow morning is just preliminary GDP at 8:30 a.m. So watch that volatility at 8:30 in the morning. So we are still in consolidation on the hourly chart, right? Still very clear to see we're still in this consolidation range. We have not created a lower low. We have created a higher high, a higher low, lower lows for the most part. So it's kind of constricting here. You can kind of see that. When it breaks out of here, I would like to see it come down into a bit more of a discount. Maybe even take this out here. But I would like to see it come down into a discount, create a higher low, and then take out buy side in this volume imbalance. That's what I would love to see for tomorrow. And given that it is Wednesday, I would potentially consider one more expansion to the upside before we see any further downside. Or, you know, this could serve as a failure. And if this does fail, we'll start to see some of the short-term lows fail as well, and then we can start to aim for some of these lower time frames here. But for the time being, any movement down, we are anticipating price supporting it at key levels, whether they're bullish order blocks, fair value gaps, buy side imbalance, sell side inefficiencies, or previous lows potentially, or previous highs for mitigation blocks. Like this one will be a pretty good one to watch for as well, because it's right in the middle of the body of this bullish order block. There are a lot of different entry techniques, but for the time being, we are still curious to see if it can go higher. So that's it. That's what I'm going to stop the stream tonight at. We cannot trade without further information in the morning. We'll see Asia, we'll see London, we'll see a lot of those things occur, and we will keep an eye out for that. So let's take a quick look. Move this back to the daily. Let's take a quick look at these side by side. So we got micro, NASDAQ, and then we have E-mini S&P as well. Doesn't matter if I'm using S&P or micro S&P, really doesn't. It's roughly the same. So on the daily chart, we kind of see that, we'll zoom this out a little bit so we can see this. And let me do one thing that'll make this a little bit easier to see. Okay, so this is NASDAQ on the left side. E-mini on the right. So on E-mini, let me pull the daily out actually. Okay, so E-mini, it has yet to take out any of this short-term high, but Nasdaq's taken that out already. Or sorry, rather, E-mini took that out as well. What we haven't taken out yet, and take a look here. So Nasdaq has taken out one, lower, medium, and close to the second to the highest, right? E-mini is taken out first, second, and then it hasn't taken out this area yet too. So remember that six sister concept I had mentioned. I think E-mini is going to see some really nice movement to the upside tomorrow. I anticipate that it would like to take out this secondary high because Nasdaq's already there. I think that we're going to see a little bit better movement in S&P soon. If we see it fail there, I think that is very interesting, but I would prefer if this came all the way up here first, took that out, and then moved downwards. I think that would be really great, but if not, I am looking to see if it doesn't make it above there. I could see that as an SMT divergence because we see this second peak here on NASDAQ serves as a lower high to higher high, whereas this on the S&P, we would see this as a higher high to a higher low. So that is one possible SMT divergence I'm looking for to see if we will head lower. Now, if this market just blows up and goes for broke and creates, new relative new equal highs or higher highs, that is going to be very interesting as well. We think that there's interest rates potentially in the coming months. There is talk about interest rates being brought down based on inflation. And if we have interest rates go down, then it's cheaper to borrow money. And if the cheaper interest rates are, the higher stock prices typically tend to go. So a lot of things to consider here. We're at a really, really key inflection point. There could be major war. There could be a whole bunch of things that occur on defaulting of real estate and overseas. So there's a lot of macroeconomic things that could happen as well. We will trade price as we see it. So short term, yes, I think we're gonna head up and take out this short term high. And if not, I would like to see that as a SMT divergence to help us take this a little bit lower. And that is it for us today. Let me move S&P back. Was this helpful, everyone? Insightful? Any questions? What are you guys thinking in the chat? Any questions from folks? See if anyone's even still here. Let me check YouTube. Let's go to, I guess I have to click on my own live. Looks like there's a few people still here, at least. Well, sounds like, I don't see any questions here in the no. Awesome, awesome, awesome. Okay, cool. Well, I hope that was helpful, everybody. Let's see. Anatoly, can you just point to your study in order? Yes, sir. Insightful, helpful. Awesome, CEZ. Appreciate you. I appreciate you as well. Appreciate the thanks there. Anatoly, can you just point to your study in order? Do you mean, Anatoly, do you mean like how I studied ICT and in what order I might study ICT in the future? Is that what you're asking? Uh, yeah, Anatoly, let me know if that's what you're asking, like what you would study in terms of ICT and order. Let me know if that's what you're asking. Where would I start? Okay, cool. Phoenix AVS, what time are you starting in the AM? I usually will try to wake up. It varies, but if I'm lucky, I'll be up and running by 7 a.m. Eastern. If I'm less lucky and I'm super tired for some reason, sometimes I'll wake up at 8, 8:30. Usually before 8 o'clock in the morning Eastern. Okay. Um, let's see. See easy. There's one thing I'd like to point out: the importance of displacement. Yes, absolutely. That is a 100% importance thing. And if you missed it, I pointed that out when we were going through the market maker sell model that I looked at today, right? But so let's go to the playlists. Anatoly, we'll talk through where I would start. So anybody who has found this YouTube channel knows that I'm trading ICT concepts, inner circle trader concepts. This is you can look at Michael Huddleston is just inner circle trader, and you should be starting, in my opinion, you should be starting at the 2022 mentorship. Let me see if I can find it here. So this mentorship here. Come on. So start with the 2022 ICT mentorship. I would also pair that when you're done with this, study it again. But I would also pair that with the If I Could Go Back and Tell Myself What I Know Now, as well as the Ends series. Watch those series as well. Following that, I would go through the core content, which is this 2016 material. At least go through the first 8 months. There was a lot of great information in the last months as well, but at least go through the first 8 months or so. And then study that, really grind through that, take notes, watch it 3 times, 4 times, take notes, and really understand that. The last thing that I think people should do is 2023 at the very end, if and only if they really are thirsting for all the knowledge. I mean, you don't need 2023 at all. You have no need to do that. But before you do 2023, I would also go into market, where is it? Market Maker Primer course. This is a great one for beginners as well. OTE pattern recognition is great for optimal trade entry. And of course, Market Maker Forex series. Do this maybe after you're done with core content, because that pulls a lot of concepts together. So hopefully that helps, Anatoly. Phoenix AVS Fair, See Easy. I had that as a side goal every day I was in the market during this year for 2 weeks straight. Only then I understood what displacement is and how it reduced my losses and disturbed my good trades. Yes. Displacement is it's the easiest type of candle to see. The reason why the 2022 model works so well is that you see and look for displacement. If you look back on all of his 2022 model videos, he is almost always looking for displacement, to see Easy's point. So if you can keep your eye and hone your eye to see that, you'll open up a huge world of new and higher probability movements, right? Now, you can certainly get tripped up if you're looking at it with the wrong bias, because there are certainly times where it displaces just to go lower. So you need to be able to put all these concepts of time and price together and work concurrently with each other, work accreditably with each other. So Anatoly, thanks for your effort. I'll try that approach from the beginning. Yeah. When you study, you can't be watching these videos all the way through and just thinking, wow, I just watched a video and that's it. You need to pause that, take action, go back, study back test, look and see what you found, and then take notes as well. Journal, look for examples of that in real. It's a large process. It's a long process, but the more you do that, the more you take what he taught you, go back into the charts and look for it, come back to the video and replay it. The more you do that sequence, the faster you'll learn. If you don't do that, you will learn very slowly. It will be a painful journey for you if you don't do that. I believe me. So, okay, so I think that's it. I am planning on doing a video. I guess let me know if this is something you'd be interested in, but I was thinking about creating a video on some of my favorite models, what they look like in price. I was gonna maybe do a video on that to help people maybe help people who have studied ICT a bit, see what kind of models work and see what I've used to trade as well. I don't know. That was an idea that I thought maybe people might be interested in. Just trying to think of what else might be valuable for you all. I think there is something. Let me see if there's something earlier. Questions at the end would keep this running smoothly. I just saw that, Phoenix. Appreciate that. Yeah, I mean, that's just an idea. I don't know if it'll be valuable, but yeah, if you have any other ideas, I mean, I will try my best. There's a lot of different things that people are sending me, and I can't make a video for everything, but I will try my best to make videos for like the best, like the most requested topics. But yeah, I think that's it for today. I want to make sure I let you go, get some sleep. Let me go back to the webcam so we can kind of show that it's the end of the time. I want to let you go a little bit early today. It's 10:21 p.m. Make sure you go drink some water, stay hydrated, get some rest. Maybe if you're studying, maybe do an hour of study. Maybe study from now until 11:30. Make it high quality time. Don't put your phone away. Put it away on like buzz mode or silent mode, and just study and get it and write it down. Sleep on it, take a shower, go to bed, and do it again the next day, right? Yeah. Thank you all for coming. As always, I greatly appreciate you. It's so cool getting a chance to connect with you, and it's just blows my mind. We're almost at, I think we're at 746 subscribers from 22 way back when, and I think that it's just incredible getting a chance to be here for you. So I hope I continue to be a beacon of good value for you in the future, and we'll see where we can get price to go tomorrow. We'll see how London and Asia ranges trade, and then we'll catch up in the morning. Anatoly, you did manual, how to pass evaluations. Yeah. We do have the evaluations there. I think I created that in the playlists on this futures trading one. I have a video on how to pass evaluations accounts and the strategy I would use to pass them. Personally, I think that your strategy has to change depending on your monetarily, like your financial background. If you don't have a ton of money yet, or like enough money that like a couple $100s isn't going to completely bankrupt you, you have to be careful with these prop firms, because if it's the first time trading and you haven't spent enough time in demo, you can blow through a lot of these accounts super fast. So I think the sale is ending. I think that there's no more sale after tonight. Oh, there's like an hour and a half left. So yeah. I'm not gonna buy any more. I have too many accounts right now. I was buying a few just to test out a couple things, and unfortunately I passed all those. it's a weird problem to have, because basically I'm not allowed to make those into performance accounts until unless I fail some performance accounts, and I don't plan on failing any more performance accounts. So I actually have five accounts that are waiting that I cannot turn into performance accounts. So if I did, I would actually have 25 performance accounts, and that's not allowed. So right now, with the 2 passing, I've got 19 total. I'll be continuing to copy trade 19 accounts, and each and every day. So we'll continue the good fight. And with that, everybody, please take a good break. Go to sleep. Stay hydrated. We will catch up in the morning. All right? Take care, everybody. Have a good one.